Ladies and gentlemen, good evening. Christopher Aaron here. First of all, if I sound a little bit different, that is because my microphone just broke. And you know what they say, of course, about when life gives you broken microphones. What do? You use your backup microphone and you buy a new one. So that is in order, and that will be here in a few days. And by next week, I hope to have that up and running. If you have any suggestions for good quality microphones that can plug into a standard laptop than a USB port, I would most appreciate it. So in this week's broadcast, I want to look at two topics. This was an important day today. The Fed meeting today, the Federal Reserve, the central bank here in the United States. I want to look specifically at how gold and the stock market responded to this interest rate hike that we saw today. So we spent a lot of time discussing this over the last couple of weeks. How is the market going to respond to this interest rate hike? And let us take a look. So let's call this a gold and a stock market update. As I said, we're going to start covering some new markets in this series, and eventually I will move some of those new market discussions to another sub-channel so we can focus on precious metals here. But for the time being, while we're getting that set up, let's just take a look at how these things played together. So just looking at the news today, the Fed hiked the interest rate by 0.25%. This was the ninth hike of the present cycle, which began exactly 3 years ago. 3 years ago, December 2015. So we see this interest rate hike, and there was a lot of discussion. President Trump was coming on the air and saying that he does not want the Federal Reserve to hike interest rates again. And Jerome Powell, in his statement today, essentially calling Trump out, except not by name. Making statements to the effect of, well, we will not play to any political interests, we remain independent, etc., etc. So there's definitely a war of words going on between the executive cabinet and the quote-unquote independent Federal Reserve here in the United States. Bottom line is that they did hike interest rates, so we have a new target, 2.25% to 2.5%. And we can see here, this is just showing the stock market, the S&P 500 index here in the United States, Monday, Tuesday, and today. And you can see right here at 2 o'clock is when they announced the interest rate hike, and look at that tanking in the stock market. And let's just see how some other markets responded to this announcement. Let's look at when the Fed interest rate hike occurred right here at 2 o'clock Eastern time, and we can see a fairly classic, a fairly well-defined deflationary episode here, deflationary scare, we could call it. So money moving into quote-unquote paper safety assets, U.S. dollar denominated assets, bonds, the U.S. dollar. Gold sold off on this announcement. We'll talk about that in a little while. Stocks were lower, and we all know what happens, of course, when stocks are lower and gold is lower, the gold stocks will multiply both of these losses. Now, when this is flipped in years ahead, when there is an inflationary period ahead, the gold miners will leverage this to the upside. But this is the situation we find ourselves in now. The one interesting thing here is that commodities did not sell off as much as stocks. So a slight difference, although they've been very weak recently, as we've been discussing in the premium service. The breakdown that we're seeing in commodities, which is indicating that most commodities such as oil, natural gas, platinum, copper, etc., will most likely be going through what is going to be an extended basing period. We're talking a period of sideways price action for most industrial commodities that should last many years, perhaps even a decade or more. And we're starting to observe evidence of that with the trend break in the broad commodity sector that we have seen over the last week. So we'll be talking about that here on this channel, or on the new channel where we're talking about related asset classes. Gold has a relationship with commodities. Gold is sometimes lumped in with other commodities, and sometimes gold acts as money. This is just the reality of the market. So we will be looking at related topics such as commodities in the new channel, which is coming up within the next couple of weeks. This was the market reaction, okay? We may not agree with it, but this is what the market reaction was. Now, let's look at a few points here. I especially want to touch on the gold miners. Okay, so let's bring up the GDX Senior Gold Miners Fund here. We're looking from late 2015 through the present, the last 3 years. And even if you are only interested in the physical metal, I would say to you, I would really recommend that you begin to follow the price action in the gold mining complex. Even if you have no interest in ever buying a share in any gold miner whatsoever. And why is that? Because the relationship between the companies that dig the metal out of the ground and the metal itself is quite an interesting relationship. This is a relationship that goes through periods. It waxes and wanes. Sometimes the correlation is very tight. Sometimes, quite often, in fact, the gold miners lead the price of the metal, with the exception that the gold miners tend to get things wrong at extreme events. So when there's an extreme low, the miners tend to get things wrong, and an extreme high, the miners tend to get things wrong. But they usually tend to get things right during the middle. So I would say we'll be talking about this more over the weeks and months ahead, but if you're a physical stacker only and you're looking to time your purchases, it's good to turn and look at what the gold miners are saying about the metals. What is the gold miner's opinion, so to speak, about the metals? Now, I want to draw your attention right here. This trend line that we have observed dating back from 2017, this trend line was drawn in back in July of 2018. July of this year is when I drew this trend line in here, observing this last hit. I have not moved this trend line since then. And for the last 5 months, I've been saying that the point that we need to see broken is the confluence of this trend line and the broken black horizontal support here at the 21 level. I've been saying this every week for the last 5 months, that until this is broken, I still consider this a counter trend rally that will lead to lower prices for the gold miners. And look at where the sector reversed today. Let's just zoom this in for a moment so we can see it. You couldn't make this up. Look at how the gold miners spiked higher, hit this line here. I did not redraw this line to touch the top of this reversal candlestick. This line was here. So the idea that it is not worthwhile to monitor the technical price action here, these technical trends in the gold miners, the idea that there is no value to doing this, it's laughable at this point. When you look at something that is so powerful as this trend line and how exactly precise this hit was today, we have to follow this. And when we start to see the market breaking this trend and basing for a period of time after this trend is broken, I expect that'll be sometime in 2019, that will give us a very nice signal. It is still possible that the low may be forthcoming after that point, but it will give us a very strong signal that the waters are becoming increasingly safe to swim in. And that is what we're looking for. But absolutely incredible as a technical-based analyst to see something like this. And I would hope that you would agree with me to see how precisely this market is respecting a specific trend that we drew in 5 months ago. Anyway, let's move on. I wanted to talk about the stock market. Okay, now look at this price action. This is real key. So we saw the weakness in the gold stocks, and now look at the S&P 500. Okay, we are talking the same time frame, late 2015 through the present. Now, we made the call, okay? Mainstream analysts at this point may be saying, as we're looking at the stock market down here, they may be saying, well, yeah, this is where the stock market was just about a year ago. So really, it's not that big of a deal, right? It's not that big of a deal because we've only given back the last year's worth of gains here. So right back where we were this time a year ago. But here's where I am saying something different. And the point that we made this call saying that the decline which began here from late September was different in nature than this decline from February. The point at which we made that call, I just want to rewind back in memory, and you can go and watch the videos on this, was right here. Okay, so we saw the break in this blue trend line. It's a trend area. We can see how that area started to fan out with a slight variation here in some of these lows. And that trend was broken here at the blue. And when we saw the retest, and we saw the retest fail, this is where we said this market has changed its structure. Okay, and what have we seen since then? A decline, a second retest. Markets can sometimes do a second retest, and then this absolute failure that we've seen here. So the power of monitoring these trends, we saw that in the gold stocks. We see the breaking of a trend being the key defining point here for the widest index of the US stock market, the largest stock market in the world. We see how important these trend breaks are, yet no one mentions this. Where is this being discussed in the mainstream press or even amongst so-called popular financial analysts? Where is this being discussed? That you can watch, you can monitor for these trend breaks, and then you can trade and you can make high probability assessments for what the market is going to do after these trend breaks are observed. Okay, so what do we expect now? Let's take a look at this magenta line, this long-term trend line. Let me zoom this out as we look at a target down here, most likely between 2350 and 2400 on the S&P 500. This target, by the way, was given all the way back here when we saw the trend line break. So it's not like I'm just putting this out now. Go back and rewind, if you will, if you choose to do so, the videos from several months ago. And how are we deriving this target down here? This may seem simple, but you will see the power of this over the next 1 to 3 months. You will see the power of this. We're calling this target down here at the lower rising trend, the lower parallel trend. Markets often feature parallel features. They simply like to move in a parallel manner over time. This is the definition of an orderly linear channel versus a disorderly market that was attempting to break out in a parabolic advance, which then failed. So we have the target down here at the lower trend line, which also matches very nicely the 50% Fibonacci retracement. We can see that here in the light silver lines, the 50% Fibonacci retracement of the entire 2016 through present surge, this major last surge. Okay, so a confluence of levels coming in here, and eventually we'll have a new trend line that will probably match with that as well, coming from the highs. It's still too early to draw that in, but we'll have a confluence down here in the 2350 to 2400, and this is where you should be very careful over the next 1 to 3 months, because we will most likely have people getting very, very bearish right here. And what I would say is this is where the stock market is going to have a vicious rebound rally. And in fact, this rally may be quite tradable perhaps back up to 2700, 2800, maybe even making a double top with the former all-time high once we get there. I think this will be a very tradable rally setting up here in stocks. It's not there yet. Do not get in front of this freight train, which is now moving lower. Not quite yet. So we're talking about these diverse markets here. We talked about the trend line in the GDX and the gold miners, how that relates to the price of gold, of course. We covered gold extensively last week, and we're talking about the stock market here. We're seeing this deflationary episode setting up across all these markets. And I would say to you, if you're a precious metals investor, and I would like to speak to some of the younger investors out there right now. And there's no cutoff for this. It's really how young do you feel about the markets. But I would say, especially if you're in the earlier part of your career, and you're starting to recognize some of the value in mapping out markets such as this, and you're starting to see how markets respect patterns repeatedly over and over and over again. And so, yes, We can believe in the precious metals fundamentally, but think about it through the future of your career. If you're 25, if you're 35, if you're 45 years old, how many more years are you going to be involved in the markets? And how many more years are the precious metals going to be, let's say, the only market that you want to participate in? Because eventually there will be a bull market in the precious metals, which will lead to a complete revaluation of the monetary system. Gold will be revalued at a number much higher than today. Silver will be revalued at a number much higher today. But that won't happen forever. There will come a point where a prudent investor will take some of their profits from precious metals in the years ahead, and they will look to diversify into other markets. So what I would say to you is, if you can see that big picture, right? And what would those other markets be at the time? Who knows? Maybe land, maybe commodities, maybe, God forbid, can we mention sound businesses that are actually operating at a profit and paying a dividend in the future. So if you can see the big picture with this, I would say to you to really consider keeping your eyes and your mind open about this type of analysis, because what we want to do, we want to learn how to chart the markets, how to interpret all of the markets, not just the precious metals. The precious metals hold a very special place in the broad market themes, in the history of this country and of the world, and they will continue to do so. But I would simply say that I think we can see the power in this form of analysis. And so if you're someone who really wants to be a broad student of the markets, this is the time in this portion of your career to develop a system, to develop something that works and that is repeatable for you. Not for me, but for you. So that is what I'm attempting to do here as we expand this channel. I'm going to present the system here that works for me, and I believe there is a lot of merit to this system. There's a lot that can help people in various ways across diverse markets. I do thank you for watching this video. So as we've been talking about, we have lower prices ahead of us still for gold, for silver. That was a very bearish reversal today in the gold mining chart. That was an extremely negative day today in the broad stock market. It looks like a deflationary episode is ahead of us. Hang on to your hats. This is going to be an interesting time to watch this develop. Make sure to hit the subscribe button if you like these videos. We will do these at least once a week going forward. You'll get updated. If you want to go deeper into the precious metals, what investments are we making in the precious metals, and how are we arriving at those decisions, including analysis like you just saw on the stock market, we do that also on the US dollar, also on the bond market, and we bring it all back to the precious metals. If you're interested in that, there is a premium service that you can subscribe to. It includes videos like this, except they're much longer and more in-depth, with specific targets given for all of these projections. You can find more about that on the website. If you would like to speak to me one-on-one, please know that I take no commissions or fees from any of these funds, any of the ETFs. Nothing that I profile here on this channel gives me anything, I meant to say. I work entirely for subscribers such as yourself to help illuminate trends and visible aspects, turning points in the markets. So know you can reach me on the website. I wanted to say thank you very much. There were a few people who donated to the free videos, and I really appreciate that. So very interesting time that we are living through here as we look at this potential for a major top setting up in the stock market. But I'll tell you this, it's not going to go straight down in a line like this. So I think fairly soon, within the next 1 to 3 months, there's going to be a nice tradable rally. And that is going to be, we're going to be disclosing the exact trades that we do in the new global macro service, which is coming out 3 weeks from today. And finally, I just wanted to wish you and your loved ones a Merry Christmas. Christmas is next week, so a bit of an early Merry Christmas wish to you and your family from me and my dog here, all the best to you, and enjoy your holidays.